Stop scrolling. Your smart car purchase? It's officially a financial time bomb. We've got the data. 6 popular family SUVs and luxury EVs are about to be blacklisted by US insurance giants. Uninsurable by 2026. This isn't about mods. This is about insane theft rates and repair costs. If you own one, you need to watch this now. Range Rover Evoque 2019-2023. The uninsurable hit list. All right, let's rip the Band-Aid off. Car number 1 on the disaster list, and this one hurts. The Range Rover Evoque, model years 2019 through 2023. Now look, it's a statement car, right? Compact luxury, British pedigree. Wrong. It has become the poster child for what we call the theft epidemic. Forget joyriding. We're talking professional rings utilizing simple keyless relay attacks. The UK data is apocalyptic. It was the most stolen SUV in the entire country. The financial fallout? Insurance companies paid out over $100 million in theft claims just last year alone. That cost isn't vanishing. It's coming straight back to your wallet. But wait, there's more. A fender bender in the parking lot. That little bump can trigger a repair bill of up to £8,000. That's over 10 grand because of the complex sensor arrays in the nose. Bottom line, insurers are terrified. We're seeing major US-based carriers already whispering about outright refusal for new policies. And renewals? Prepare for your premium to skyrocket from $1,500 to potentially $4,500 annually, often with draconian restrictions like being banned from street parking overnight. If you own this, your equity is eroding fast. This is no longer a luxury vehicle. It's a massive liability. BMW i3, 2013-2022. The carbon fiber catastrophe. Moving on to car number 2, this one showcases the fatal flaw of being an early adopter in the EV game. The BMW i3, model years 2013 through 2022. We loved its groundbreaking design. We applauded the innovation. But financially, it's a liability black hole. The core issue isn't the electric motor, it's the carbon fiber structure. Remember that fancy lightweight chassis? Insurance companies despise it. Traditional cars take a small hit, maybe 2 grand, for a minor collision. But if you tap that i3, you're looking at a repair bill that instantly jumps to $20,000, maybe $25,000 or more. Why? Because carbon fiber doesn't bend. It breaks, and it can't be easily hammered out. It has to be replaced. And let's talk about the battery, the heart of the EV. Replacement cost for that aging pack? A cool $15,000 to $18,000. Insurers are getting wise to this catastrophic repair expense. By 2026, the industry is already signaling they will refuse comprehensive coverage for i3s over 5 years old. Even worse, policies that are offered are starting to explicitly exclude battery failure or degradation coverage. If you're eyeing a used i3 for a bargain, realize you're buying a vehicle with a built-in, uninsurable expiration date. The sticker price is a fraction of the true cost of ownership. Nissan Leaf 2011-2017. The battery death sentence. Time for car number 3. And this one is the ultimate cautionary tale for anyone tempted by an ultra-cheap used EV, the first-generation Nissan Leaf, model years 2011 through 2017. If the i3 was a repair nightmare, the Leaf is a total financial write-off waiting to happen. This model represents the old guard of EVs the insurance industry is completely abandoning. The core flaw? The air-cooled battery system. That design led to catastrophic degradation. We're talking 50 to 60% capacity loss after a decade. Your maximum range is now a terrifying 30 to 50 miles per charge. Here's the punchline. A replacement battery pack costs between $10,000 and $15,000, which is literally more than the current market value of the entire car. And the situation is getting worse. Nissan has already stopped supporting battery replacements for these older models in certain markets. The insurance calculus is brutally simple. The moment this Leaf sustains even minor body damage, the insurer's algorithm immediately flags it as total loss. Why? Because the repair bill, even a small one, combined with the underlying depreciation and latent battery liability, instantly exceeds the car's worth. You are buying a vehicle that is pre-programmed to be totaled by your insurance company the second anything goes wrong. This isn't transportation, it's a rapidly depreciating paperweight. Mercedes-Benz EQC, 2019-2023. The depreciation disaster. All right, car number 4 is where luxury meets sheer financial panic. The Mercedes-Benz EQC, model years 2019 through 2023. This car embodies the depreciation disaster, a nightmare scenario for underwriters. The EQC has suffered the single worst depreciation rate among luxury EVs in the UK, plummeting nearly 70% of its value in just 5 years. That steep drop is a flashing red light for insurance companies. Think about it. A 4-year-old model is now worth maybe $25,000, yet it consistently generates repair bills of $35,000, even $40,000. The math simply does not work. Why are the repairs so crippling? Take the headlights. Those fancy adaptive LEDs cost up to $5,500 per side to replace. But the real kill shot is the battery. Even a seemingly minor impact underneath the car can trigger a mandatory protocol-driven replacement of the entire battery pack, a tab running $18,000 to $22,000. Insurers look at this equation and see only guaranteed loss. This vehicle is now unofficially the most hated EV in the underwriting industry. Major carriers are not just hiking rates, they are systematically refusing to offer comprehensive policies for the EQC. If you own this, you're not driving a Mercedes. You're driving a money pit where the cost of repair consistently bankrupts the car's salvage value. You need to offload this liability before the market completely collapses. Jaguar I-Pace, 2018 to 2024. The perfect storm liability. We are now at car number 5, and this is where all 3 failure points, theft, repair costs, and depreciation, converge into one catastrophic failure. The Jaguar I-Pace, model years 2018 through 2024. This vehicle is the undisputed champion of the uninsurable list. The I-Pace is a perfect storm liability. How bad is it? We're talking a 75% depreciation hit. That means a luxury car that was $90,000 new is now valued at barely $20,000. But the repair bills are interstellar. A moderate crash can easily generate an invoice of $50,000 or more. A cooling system fault, a common issue, requires a $12,000 fix. Bottom damage to the undercarriage battery? That's a guaranteed $28,000 replacement bill. Do you understand that the cost to fix a moderate accident is 3 times the current market value of the vehicle? Insurance companies have completely thrown up their hands. Major carriers have walked away entirely from I-Pace policies. If you can find coverage, expect niche providers to quote you rates up to $9,000 per year to insure a car that's only worth $20,000. This is the definition of a toxic asset. If you own an I-Pace, you are financially trapped, and the insurance industry has already declared it dead. Tesla Model S, 2012 to 2016. The proprietary trap. Finally, we arrive at the 6th and perhaps most painful warning. The early generation Tesla Model S, model years 2012 through 2016. This was the car that changed the world, but it has now officially become an uninsurable time bomb. The core financial risk here is not just aging battery tech, but Tesla's proprietary parts monopoly. Because Tesla controls every part and the repair network, accident repair costs are absolutely terrifying. A simple rear-end tap, replacing just the bumper and sensors, is an immediate $10,000 minimum repair bill. And if you face the inevitable drive unit failure that plagues nearly 40% of these early models, or a full battery replacement, you're looking at $25,000 gone instantly. The math is simple. High repair costs coupled with catastrophic early model reliability means maximum risk for underwriters. Insurers are now systematically abandoning Model S models built before 2017. If you can find a policy, prepare to shell out $5,000 to $6,000 or more annually for insurance on a rapidly depreciating vehicle. The policy will be riddled with exclusions. You bought into the future, but the insurance industry is forcing you back to the past. If your Model S is on this list, you are running out of time to sell before the policy landscape locks you out completely. So there it is. The insurance industry's internal data doesn't lie. These 6 vehicles are a guaranteed loss on every single policy they write. They know exactly which models are engineered to financially sink their owners through theft, astronomical repairs, and catastrophic depreciation. This isn't theoretical, it's already happening. Now, my advice for the American market is simple and urgent. First, the exit strategy. If you own one of these 6, you need to be actively looking for your way out. Sell it, trade it, do it now, before those 2026 renewal premiums hit and absolutely crater the resale value. Second, ignore the bargain hunters. That cheap used Evoque or Model S is cheap for a reason. The low purchase price will be immediately offset by unmanageable insurance costs. Always, always, always check the full, comprehensive insurance quote before you sign the purchase agreement. Protect your wallet first. Host points to the camera, firm and direct. Don't fall victim to these expensive mistakes. Hit that like button if this saved you from a financial disaster, and subscribe to VaultShift now. We'll keep bringing you the critical data you need to drive smarter and save big. Drive safe, everyone.